Morning to you.
Good morning, Keith.
I know we spoke indeed with Deputy Toomey earlier on about this whole Oireachtas report, or the Oireachtas Committee meeting on banks and that. Is this kind of strange for Ireland to see this happening and the bankers going in and being sometimes as arrogant or as open as they are?
Well, I suppose it's very unusual in the sense that we've obviously before the downturn we haven't seen bankers called to account in the public domain. It has become a more frequent event. I mean, it's not the first time that they've been called in. I certainly think it's obviously indicative, which it is, the fact that the government have more of a role to play in being involved with the banks for all the reasons that we've seen in the past. I mean, apart from the fact that we're the majority shareholder.
And also we as taxpayers bail them out too.
Exactly. So that's why, it's important that they're called to account. Now, I have to say, to what extent they're going to toe the line in the future in terms of the mortgage crisis, which is the big one, remains to be seen. I mean, we've seen the insolvency bill is now law and is coming into effect this week. How that's going to work in practice is going to take 6, 9, maybe 12 months before we can judge that. But there are indications at the moment, for example, that a lot of the banks will not want to enter the process, and they have a veto because it's, as we've said in the past, it has to be a process that both parties, which is the borrower and the lender, have to agree to enter. So it remains to be seen.
All right, we have a couple of questions in today in relation to Vodafone, by the way. 400,000 Irish shareholders. Will they benefit from Vodafone's?
Well, basically what's happened here is Vodafone had a big holding in Verizon, the US mobile carrier, and they've sold that for an enormous sum of money. And as a result, they're going to give a lot of the funds that they receive from that sale back to shareholders, as well as retaining some of the monies for future investment. This is a massive deal, Keith. And the bottom line here is that there are 400,000 Irish shareholders in Vodafone. And the background to that is they were originally the Eircom people who had the bad experience. We won't go into everybody who had bought those shares. Listening this morning will be winching at the thought of it. But when Eircom sold their mobile business to Vodafone, they got Vodafone shares, and that's how they've ended up becoming Vodafone shareholders. So what's going to happen here is that when the money comes back and it has to be decided how much per share will be given back by Vodafone to its shareholders, they will get a cash payment. And also you've seen a big rise in Vodafone shares as a result of this deal. So it's good news for everybody who's held those shares.
And is there any indication as to how
well,
much?
I've seen some press reports suggesting that you could get maybe a 40% payout, the equivalent of your shareholding. So in other words, if somebody has €10,000 worth of shares, they could get €4,000. Now, I don't want to be getting people's hopes up because that remains to be seen. But the bottom line is that they reckon if you take the calculation, which is quite convoluted, of all the events that have happened since you bought Eircom shares, that you're probably back to what you paid for them with all of this. So it is good news from the point of view of Irish shareholders in Vodafone. And as I said, there's a lot of them out there. There's 400,000.
We have somebody else on the line today. They have a life policy attached to their mortgage, which is less than the amount that they owe, and they're worried about this and wondering what Dave's advice would be.
Well, this is a big problem because that can happen for a number of reasons. So we're talking about maybe a scenario here where somebody has a mortgage of €200,000, and they took out a life policy, a mortgage protection policy, for example, of €200,000 when they got it. A mortgage protection policy falls, the cover falls as the loan falls. But we'll say, which is quite commonplace, somebody has had to go in and renegotiate their loan and they may be paying interest only for a period of years. So again, go back to the example I gave, we'll say that loan's come down to 180,000 now, but the cover on the policy could be down at 150 or 160,000 or maybe even below that. So there is a gap there. And it's one of these things that because people obviously are under pressure financially, they're not thinking of the fact that I could have a shortfall of my life cover if something happens. So it's very important to review and look and see what kind of cover do I have if the unthinkable happens, and it can happen to anybody, and is there going to be a shortfall there between what I owe the bank and the cover I have in my policy.
Because the debt does not die with you.
The debt does not die with you, unfortunately. It can go against your estate, or you're leaving a problem there for your family. And this issue becomes far more pronounced if you have somebody, for example, Keith, who has a buy-to-let property, where at the time when those mortgages were given out, a lot of banks didn't ask for life cover for competitive reasons. So you have people out there who have substantial borrowings on a second property, which is not their home, and may have no life cover. and it could cause an absolute crisis for your family if something happens.
All right, and finally, Dave, somebody wants to invest a lump sum. They invested a lump sum in 2006, 20,000, in a thing called the Trilogy Bond.
It's a Trilogy Fund, yeah.
Trilogy Fund, is that what it is? Yeah. And they've lost half it now. Should they withdraw it, or what should they do?
Well, to be honest with you, I would loads to kind of, I suppose, advise somebody to take the money and go. But you have to reach a stage where you have to look at the fund that you're in and see, is it worth staying with? And in this particular case, I have to say it isn't. And they should be looking at alternatives of maybe trying to recoup that money by moving to something else. And unfortunately, I would say they should bite the bullet and move.
All right, Dave McCarthy and Associates in Woodkey. Thank you indeed for joining us today. It's 9:52, back just after these.